Welcome back to the Financial Beanstalk. Today, we're talking monthly paying dividend stocks. And you might ask yourself, didn't you already cover monthly paying dividend stocks?
But I'm not done yet. Call right now and I'll triple the offer.
Apparently, people like getting paid from their investments every month, so I'm back with not one, not two, but 3 monthly paying dividend stocks. Full disclosure, I don't own any of these right now, and I'm not saying that you should buy any of these. I'm just throwing the information out there so that you can start doing your own research, because we all know I'm not a financial advisor. However, I am considering opening a position in these, so stay tuned to my stocks I bought, dividends I got videos to see if and when I do that. But let's get into it. So what I'm going to do is give a brief overview of each stock and what they do, how much they pay per share every single month, and just for funsies, we'll throw in how much you would need to own to make $100 per month. Because that's the goal, right? To have our dividends pay for our expenses. And mostly $100 is just an easy number to work with. If you want some riveting nighttime reading, I will link their investor relations pages in the description below. That'll show how much revenue they're pulling in, how much debt they have, so you can do that additional research. And they can be real page turners, let me tell you. Before we get started, I'm going to ask you to hit that subscribe button and that like button because it would help the Beanstalk grow. Got it? Good. First up, we're talking STAG Industrial. Ticker symbol, STAG. STAG is a REIT, which for those of you who are new, a REIT is a real estate investment trust. Basically just a company that invests in real estate. The nice thing about REITs is that they have to, by law, pay a majority of their earnings in the form of dividends, which is why you'll see a lot of REITs have a higher dividend yield than other companies and why a handful of them pay monthly. Robinhood gives this brief description of STAG Industrial. STAG Industrial Inc. is a real estate investment trust which focuses on acquisition, ownership, and operation of single-tenant industrial properties throughout the United States.
The company was founded by Benjamin S. Butcher on July 21, 2010, and is headquartered in Boston, Massachusetts. The FINRA listed name for STAG is STAG Industrial Inc.
These Robinhood definitions aren't very good. Let's try and find a better profile. Yahoo Finance says, STAG Industrial Inc. is a real estate investment trust focused on the acquisition and operation of single-tenant industrial properties throughout the United States. Not doing so good, Yahoo Finance. By targeting this type of property, STAG has developed an investment strategy that helps investors find a powerful balance of income plus growth. As of June 30th, 2020, the company owned 457 buildings in 38 states with approximately 91.8 million rentable square feet, consisting of 379 warehouse distribution buildings, 70 light manufacturing buildings, and 8 flex/office buildings. Way to bring it home, Yahoo Finance. After reading that, what stuck out to me is the majority of their buildings are in these warehouse and distribution centers. So these are places that, for example, Amazon would utilize to store a bunch of goods so they can ship everything out in 2 days on Amazon Prime. So in my opinion, that's a pretty solid business in today's economy because e-commerce has just been blowing up lately. Walmart recently struck a deal with Shopify, so that's another point for e-commerce distribution centers because they could utilize them. So overall, I have a pretty bullish outlook on STAG Industrial if they can continue to focus on these distribution centers and continue to add more to their portfolio so they can keep paying that monthly dividend. On to the numbers. At the time of filming this video, their share price sits at $30.98 with a dividend yield of 4.76%. So it's a little higher than what we consider our safe dividend yield at 3%, but it's not ridiculous. Simply Safe Dividends gives it a score of 45 out of 100, which they consider borderline safe. That ranges from 40 to 60, so it's on the lower end of borderline safe, but it's not unsafe at least. With that dividend yield, it equals out to 12 cents per share per month. Now, if we want $100 every single month by investing in STAG, we'll take that 100 for the dollar amount, divide it by 0.12 for 12 cents for every share we own, to get 833.333333. So you need about 834 shares to get $100 a month in STAG. But how much would you actually need to invest in them to get that? We'll take that 833.33 repeating times their current share price of $30.98 to get $25,816.67. So if you got about $26,000 lying around and want $100 a month, consider STAG. The next stock on our list could be considered a safe monthly payer, and that's ticker symbol BOND. PIMCO Active Bond. Now, I was originally going to talk about BND, which is the Vanguard Total Bond Market ETF, but then I found ticker symbol BOND, the PIMCO Active Bond ETF, and it worked better with the joke. BND. Vanguard Total BND. See what I mean? I've actually seen quite a few bond ETFs that pay monthly, and I just learned about municipal bond funds as well that also pay monthly. So if you're looking for a generally safe and stable monthly payer, these bond funds are a pretty good place to look. I'm starting to gather a list of these so we can talk about those in the future. We're going to give Robinhood another chance here, and their profile says, Bond is an actively managed portfolio that aims to maintain a consistent level of dividend income by investing in a broad array of fixed income sectors and utilizing income-efficient implementation strategies. The FINRA-listed name for Bond is PIMCO Active Bond Exchange Traded Fund. Sounds pretty good. Consistent dividend, income efficient. I like the sound of that. Since Bond is an ETF, they do have an expense ratio, and their expense ratio currently sits at 0.73%, which is pretty high considering BND only has a 0.04% expense ratio. Come on, Vanguard, you had one job. Lock down the name Bond before anyone else. I mean, you're the founder of indexes. At a 2.91% dividend yield, it's pretty solid. It's not too low, it's not too high, it's right in the middle, like Goldilocks' third bowl of porridge. Now, since this is an ETF and made up of a bunch of different companies, Simply Safe doesn't give it a safety score. But for me, since bonds are generally a safe investment, I'm giving it my own safety score of 99. I mean, James Bond always gets the girl and wins in the end, so you can count on it. Since bond ETFs are made up of a bunch of different bonds that are on different payment structures and cycles, it does vary how much you get paid every single month. So we're just going to go off of the last payment from Bond, which was on September 1st, where they paid 23 cents per share. So if we want $100 per month from Bond, we take that $100 divided by our 23 cents per share to get 434.782609. I love being able to buy fractional shares because I can actually buy 434.782609 shares and don't have to go up to 435. Back to our example, we take that 434.78 times the current stock price, which is $112.51, to get 48,917.39. So that's how much you need to invest in Bond to get $100 a month from them. Between you and me, if I do decide to invest in a bond ETF, I'm probably going to go with BND over Bond, even though it doesn't match the joke. That lower expense ratio is just a big selling point for me. The last stock on our list today is a good monthly dividend payer. That's it. Ticker symbol, GOOD. GOOD is for Gladstone Commercial Corporation. Now, if the Gladstone part sounds familiar, that's because it's the same company that has ticker symbol GAIN, which is another monthly dividend payer that I do own in my portfolio currently. So what's the difference? GAIN invests in business debt securities, and GOOD is a REIT that engages in the acquisition, investment, and ownership of net leased industrial, commercial, and retail real properties. Retail real estate. Robinhood, you failed again. Let's go to Yahoo Finance. Gladstone Commercial Corporation is a real estate investment trust focused on acquiring, owning, and operating net leased industrial and office properties across the United States. It's a little better. I'm not quite sure how good I feel about this one. I've got puns for days. On the one hand, the Yahoo profile said they have 186 consecutive monthly dividend payments, which is a really impressive track record. On the other hand, it also said they invest in retail properties and office space, and those are two areas that I think are pretty uncertain right now, with a bunch of people working from home and people choosing not to go out and just shop online. Again, they're just a little uncertain right now, so I'm right on the fence with this one. Now they do have some industrial properties to make up for it, but I think my uncertainty outweighs that right now, so I'm going to hold back on this one for a little bit at least, even with that consistent payment. This does have the highest dividend yield of the 3 stocks I talked about today at 8.99%, and their safety score reflects that. Simply Safe gives them a score of 30, which they consider unsafe. Like I've always said, the higher the yield, the more at risk it is of getting cut at some point. Now Good does have that 186 of consecutive dividend payments that they have on their side, so I think they're less at risk, but for now, I'm out. With that high dividend yield, however, this would take the smallest investment to make $100 per month. Right now they're paying 0.12515 per share, so we take that divided by 100 to get 799.04 shares, times that by their current stock price, which is also the lowest of the 3 stocks, at $17.27, you'd need to invest $13,799.44 into Good to get $100 per month. Really not that bad, so you really just have to weigh, is the risk worth that reward of $100 a month? So those are a few more monthly dividend payers for you to look into. I've got a list of another 10, and I'm sure I'll learn about even more as I continue to do research, so I'll keep covering these in future videos, because the YouTube algorithm really likes them. And I hope you do too. Go ahead and YouTube mumbo jumbo that subscribe button, that like button, and that bell notification if you didn't do that at the beginning. Thanks again for watching, and let's continue to grow this beanstalk.